One of the most important lessons in trading is to wait for support and resistance to get hit. It will save you mental anguish, it'll save you time, and it will give you the ability to take emotions out of your trades. Looking at this chart, we see the S&P 500 going back from the beginning of September to where we are today. Each bar represents 60 minutes worth of price action. So we've seen, look at that top oval right there. You see 30.23 at the max there. That was where the S&P was really topping out in this most recent, which is a much larger double top, by the way, but that is resistance. And as consequently, down to 3,000 is also resistance. That's the bottom end of that upper oval. If you were to look for a short initiation point, wait for stops to be triggered, short stops that is, back up into that area. Now, since we've had jawboning back and forth between the United States and China, we've seen the market pull back into the 2856 area, that lower oval right there. And you can see that on October 3rd, there was a massive move to the downside. It only lasted 20 minutes. So what this tells you is there's still a bid to the underlying market. And what you want to do is if you're looking for places to take profit in your short positions, that oval, in my opinion, is the place to do it. Anything in between there is minutia back and forth. Don't try to get caught up back and forth between what news events cause what economic indicators are showing what. Look at the language of the market. The language of the market is telling you that we are trying to figure out whether we're going to make a new leg up or a new leg down. Until that 2870 to 2856 area is then resistance, we're still going to see things bounce, chop back and forth, and likely try to make a new high. Until then, though, until that area is flipped, that lower oval is flipped to the downside, be very cautious if you are short, especially when it comes to, let's say a trade deal is negotiated, the market's on a relief rally, go right back up to the highs, or at least 3,000, or 3,040, which would make a new high in the S&P. One of the things we have to remember here, ladies and gentlemen, is that central banks around the world are forcing liquidity to find yield. They're forcing money that has historically been for savings, they're forcing it into the markets. Not only that, but you have corporate buybacks that are just very, very high. Companies are borrowing money very cheaply and they're buying back their own stock. And what this does is it keeps an underlying bid to the markets themselves. The main point of this video is to wait for support and resistance to get hit. And until then, take your emotions out of the game, wait for support and resistance to get hit, and plan thereafter. Talk to you soon, guys. Bye-bye.